Welcome back to Factful Finance, where we break down complex financial topics into actionable, easy-to-understand advice. Today, we're diving into a topic that could significantly reshape the way you approach retirement savings: self-directed IRAs, SDIRAs. Did you know that many traditional retirement accounts limit you to stocks, bonds, and mutual funds? But with an SDIRA, you can invest in a much broader range of assets, from real estate to cryptocurrency. Sounds tempting, right? But before you dive in, it's important to understand both the benefits and the risks involved. Let's take a closer look at the pros and cons of SDIRA investing to make sure you're making an informed decision. Before we get started, a quick reminder. This video is for educational purposes only. Please consult with a financial professional to get personalized advice tailored to your situation. Now, let's break this down. The pros of SDIRA investing. 1. Control over your investments. One of the biggest advantages of an SDIRA is the level of control it gives you. Unlike traditional IRAs, where you're often limited to a set of pre-chosen investments, SDIRAs allow you to choose from a much wider range of assets. Want to invest in real estate? Sure. How about private equity or precious metals? Absolutely. This control can be especially appealing for investors who want to diversify their portfolios beyond the typical stock market assets. 2. Potential for greater returns. With an SDIRA, you're not bound by the limitations of traditional investments. You have the potential to earn higher returns, especially if you're investing in alternative assets like real estate or startups. Some investors have seen significant profits by purchasing property within an SDIRA or investing in private businesses that are not available through standard retirement accounts. 3. Tax benefits. Like other IRAs, SDIRAs offer tax-deferred growth, meaning you won't pay taxes on your gains until you take withdrawals in retirement. And if you choose a Roth SDIRA, your investments can grow completely tax-free. This can be a huge advantage for long-term wealth building, especially if your investments experience substantial growth. The cons of SDIRA investing. 1. Limited liquidity. While an SDIRA offers more investment options, it also comes with a significant drawback: limited liquidity. Some of the investments you may choose, like real estate or private equity, are not easily sold or turned into cash. This can pose a challenge if you need access to your funds before retirement. In contrast, stocks and bonds in a traditional IRA are far easier to liquidate. Complex rules and regulations. Managing an SDIRA requires more time and expertise. The IRS has strict rules about what you can and can't invest in, and any violation can lead to penalties or disqualification of your account. For example, you cannot use SDIRA funds to purchase assets for personal use, like a vacation home or a business you own. Ensuring compliance with IRS regulations is crucial and can get complicated, especially if you're new to alternative investments. 3. High fees and expenses. Another downside is the potential for higher fees. SDIRAs often come with setup fees, annual maintenance fees, and transaction fees, which can add up quickly. Depending on the custodian, these fees can be much higher than those associated with traditional retirement accounts, cutting into your overall returns. It's essential to compare custodians and understand the fee structure before opening an SDIRA. Real-world example. Let's say Sarah, a real estate investor, decides to open a self-directed IRA. She uses her SDIRA to purchase a rental property, which generates steady income and appreciates in value over the years. She enjoys the tax-deferred growth, and once she reaches retirement age, she can take advantage of those gains without paying taxes until she withdraws. However, Sarah also knows that the property isn't liquid. If she needs cash in the short term, she'll face challenges selling it quickly without incurring significant fees. Is SDIRA investing right for you? Ultimately, SDIRA investing can be a game changer for those who are willing to put in the time and effort to manage their investments properly. But it's not for everyone. If you prefer a hands-off approach to retirement saving, or if you don't want to deal with the complexities of managing non-traditional assets, a traditional IRA may be a better option. It's essential to weigh the pros and cons carefully, considering factors like your risk tolerance, investment knowledge, and long-term financial goals. So, what's your take on SDIRA investing? Do you think the potential for greater returns outweighs the risks and complexities? Let me know in the comments. Thank you for watching Factful Finance. If you found this video helpful, consider subscribing so you don't miss out on more expert tips and actionable advice. Hit the bell icon so you'll be the first to know when we release new content. I think you'll find the video on 5 ways to maximize your retirement savings particularly useful to help you further enhance your financial goals. Take care, and until next time, let's keep making sense of your finances.